Unfortunately for me, I don't have any drinks. I'm in the process of moving, so I'm doing this completely sober. Just right off the bat, the Tilray merger didn't really go through or got pushed back till April 30th. This really sucks for me because although my exposure to Tilray is not massive, it's still large enough for me to experience kind of a painful drawdown so far, especially since I've been running really hot since the start of the new year. Tilray, at this point in time, I started averaging into it, and I really shouldn't have done that in hindsight. I'm going to keep my exposure for the time being to Tilray and Apria, but I'm just letting you guys know it is a high-risk trade and it is a gamble, as I keep mentioning, upside down on that. Really quick, the next name I want to talk about is a ticker symbol NNDM. It was a comment made on the channel last week. I want to quickly address my thoughts on NNDM. So I did some research. I'm not that much of a fundamental trader myself, but the fundamentals themselves don't look great, and I'll tell you why. So in 2020, earlier this year, they had a cash balance of 3.75 million, which is nothing. They have now an infusion of capital of about $1.5 billion. A lot of that was through stock issuance and various other forms of raising capital. They're going to use that capital for stock acquisitions or acquisitions of other companies and their technologies. Their underlying product is supposed to be revolutionary, but we honestly don't know these things if NNDM's product is revolutionary or not. It could just be hype. There's a lot of hype in some of this stuff. I have bad eyesight, for instance, and the doctor really recommended this very particular type of eyedropper for me. And I don't know what was in the eyedropper. For all I know, he could have just peed in the eyedropper and gave it to me, and I had to pay an extra $20 for this piece of shit eyedropper that actually didn't do shit, right? So we don't really know if their business is actually going to be, profitable, or even if their product is really good, because look at their revenue in 2020. So this is the other number. Their revenue in 2020 is 4 million, and their valuation right now is about 1.85 billion, and a lot of that valuation has to do with the fact they have $1.5 billion in cash. Once again, a lot of that through raising cash and not through actually selling products. And the other thing that's a little shocking to me is their revenue in 2019 was about 8 million. When I'm saying revenue, I'm saying in millions. It's actually going down. And maybe they're doing a lot of R&D, research and development or whatever. But I don't really understand the play from a fundamental point of view. Having said that, you have a big time player, Cathie Wood, who probably doesn't wear a hand towel on her head while making videos and talking about stocks, who is a huge buyer of this. It's probably the third largest position in her ARK investing portfolio. So you do have a lot of support from big time players in this industry. Having said that, I personally, I'm not saying you shouldn't buy it, but the fundamentals don't necessarily look good, and they could be lying about the product. But at the same time, you have major support from a major investor, and sometimes that's all that matters. Some people have the ability to just push stock prices up. And if you don't understand this concept, watch the movie Betting on Zero on Netflix. Carl Icahn basically pushed up a scam stock called Herbalife just through sheer force of buying. So we never know. Anyway, going back to the question, I would not buy this from a fundamental point of view. I would be trading this once the tape and the charts turn positive. Right now, the stock technically is still in a selling pattern. It's in a very bearish pattern. But I do see that it could potentially consolidate around $6.50 to $7.50. I would not consider a buy on this stock until it cleanly breaks above $8. Yeah, $8 is more than the price it is here right now at $7. Having said that, I'm not buying this stock until the cross above 8 and a clear directional pattern up in the stock. So for me right now, yeah, you might lose $1 listening to what I would do, but I personally think I don't understand the fundamentals, so I just need the confirmation on the technicals before I get in on this stock. Other than that, it's a pretty high-risk trade. So if you're okay with a high-risk trade, then maybe do it, but I personally think there are better, more viable, higher-risk trades at this point in time. So let's go into the other trades of the week. I talked a little bit too much about NNDM, but also not enough to really give you any sort of good advice here. So what I'm watching this week, the AppLovin IPO actually dropped 18.5%, but its valuation was around $28 billion. Pretty sick. I would keep your eye out on this. Obviously, you can't short. Most people can't short stocks that are freshly issued at this point in time. But it's important to watch these stocks. We could have a push up in tape, but quite frankly, with App and the other IPO, Coin, which is another name I would watch, just be tuned. There could be a lot of insider selling. Coin's valuation is insane right now, and insiders could just want out. I know the CEO and the CFO sold over $200 million in stock. That process could continue. You have to keep that in mind. I feel like insider selling is what's keeping Palantir stock down. That's definitely a huge factor when it comes to trading these names. But they're also worth it if the charts push higher. It's going to be very volatile. But I would keep these as day trades at this present moment. Okay, if the charts tape moves higher, join in. Some other things that I want to mention: space is getting the crap beat out of it, and once again, the theme is insider selling. Richard Branson has actually liquidated $150 million of space. Essentially, space is back to where it started in 2021. It is a scary stock to short, you guys. I'm personally not shorting the stock. I'm waiting for some sort of indication that the stock is a buy. I do own space. My cost basis is around $33 a share, just full disclosure. So I'm taking a bath on space. Having said that, I'm only in for 1,000 shares, which is not a big deal at all to me. And I think I mentioned this probably 6 or 7 weeks back. I was buying and my exact words was a very, very, very small position in space in case it does break out from here. And I'm not actually buying these dips on space at this present moment. Just the same advice with NNDM. I need the charts to confirm the move. Especially with insider selling, with Richard Branson liquidating and Chamath Palihapitiya selling his entire stake in the company. I need a confirmation from the technicals before this is a buy. For the time being, I'm holding 1,000 shares at a $10,000 loss, but that is I just want some exposure to space, because if you take a look at the valuations, what, $5.5 billion right now after the sell-off, or even less. If they do have some breakthrough in space travel, or something does happen with their ship launching in May, it could have a positive impact on the stock price. Just keep in mind, this is a trade. If you guys are trying to get in on it now, it is a trade. I will wait for some confirmation on the technicals. Just let's see how it plays out over the next few days before you get in on it, okay? And the same thing with Plug and Fuel Cell. I'm not trading those names, and I just want to quickly ramble a few seconds on these stocks. There's a reason I stopped talking about these names the moment the momentum drops. When the momentum of these names drop, they typically fall like a rock. And you've seen that with space, you've seen that with Plug, you've seen that with Fuel Cell. The only name, as I've mentioned many times before, that I'm willing to hold through a lot of variance is Palantir. And obviously Tilray, I have a much smaller exposure to Tilray than Palantir, much smaller exposure to Tilray than Palantir. But that is a gamble. Tilray is a straight up gamble. I fully knew the charts looked bearish, but it's a one-off event that could potentially raise the price of Tilray. higher. So I'm willing to gamble on that stock for that reason. I just want to mention the name Viacom. I'm probably not going to hold it for too much longer. It does not seem to be catching a strong bid, even after Bill Huang's blow up, even after my thoughts on funds will have to window dress. I'm going to hold it for a little bit longer, but I might sell it with the intention of repurchasing it later. I don't know. I'm a little shocked it hasn't caught a bid so far. Let's see how that does this week. Banks are actually moving still higher. I sold, I had pretty much 80% of my money allocated to banks up until about 2 months ago, where I liquidated basically all my bank holdings at a very, very large profit. It was a great trade for me. But right now, banks are breaking out higher. I think at this point in time, the easy money in banks, as I keep mentioning, is over. But that doesn't mean you can't actually buy these banks on the breakouts for some quick day trades, for some quick cash. So watch Wells Fargo, watch your JP Morgan's a little too pricey, Bank of America, Citibank, but keep these as trades and cut your losses quickly if the trades do go against you. But those names are still essentially breaking out from here. Let's move on to earnings for this upcoming week. Monday, I don't really see anything worth trading. It is a mediocre earnings week this upcoming week. And so once again, stay focused on CSX on Tuesday, Netflix and J&J. Personally, days where Netflix is announcing earnings or any sort of news, that is a stock to trade. Keep the other ones, J&J and CSX, on the back burner. Focus on trading Netflix on Tuesday. Wednesday, I am watching Save, Las Vegas Sands, Chipotle Mexican Grill. God damn that fucking piece of shit company. Netgear and Nasdaq. So NTGR for Netgear, NDAC for Nasdaq, Las Vegas Sands, LVS, and Spirit Airlines is Save. So watch those on Wednesday. Thursday, we have American Airlines, we have Intel, we have Snap, we have SAP, and WWE. And the reason I'm mentioning WWE is not because I'm the biggest Vince McMahon fan. It's actually an amazing stock to day trade, especially on earnings. And on Friday, we have American Express and Honeywell, AXP and Honeywell. Lastly, I want to remind you, a lot of insiders are still selling app Coin Space. Even with Space, Richard Branson's sell is a negligible portion of his overall exposure to Space stock. But at the same, he could easily just be doing it to pay off tax bills, pay for hookers, whores, cocaine, whatever. It's a very small portion of his actual exposure to Space. And he could have, a nasty drug habit or something that he needs to sell a lot of Space stock for. I don't really know why he sold it or whatever, but I wouldn't make too much of a big deal about it. Just focus on the charts for right now with all those stocks. Anyway, that's all I have at this present moment. This week, the market itself had just a super, super strong tape. And, I've gotten some comments about, hey, should I start shorting this market or something along those lines? And quite frankly, until we could sit here and say the market's overvalued all day, all night, but until someone starts selling it or, the actual market starts going down, you really can't short a market with a tape this strong. Anyway, that's all I have for today. Hopefully you don't get shat all over this trading week. I'll see you next week. Thanks for tuning in. I just want the money.